Talk about the big news maker today, and that's Tega Industries after that mega acquisition. And Sajid joins in again, and I believe we have Mehul Mohanka, the MD and Group CEO at Tega Industries, to talk about this.
That's right, Aisha. We have Mehul Mohanka, who is the MD of the company. Mehul, thank you very much for joining us on ET Now. To begin with, it's a big acquisition. Can you take us through the transaction details?
Yeah, sure. If you could just specifically ask me what you're looking at, because there are different aspects of the transaction, right from the transaction rationale, which is to do with putting two complementary businesses together to create value for end customers, which are in the same profile across the world. And from there on to the entire transaction structure, which is to do with a transaction enterprise value of about 1.48 billion, which will be funded through a mix of debt and equity. We have Apollo Funds, which is going to be partnering with us as a financial investor. The equity split is 77-23, with 77 in favor of Tega. And we're going to be refinancing the debt level at the MolyCorp level, and that debt will be at no recourse to Tega's balance sheet.
Mehul, if I can, I was looking at your numbers, and it comes to the equity value comes to roughly around 44,000 odd crores, which basically means that you will be having a debt on the books of MolyCorp of roughly around 9,500 odd crores, which is there. Can you take us through what is the plan for you, and what is the kind of impact that will have on Tega's balance sheet, and how do you plan to reduce that debt from MolyCorp?
Yeah, so we'll be paying down the debt with performance. Some part of the debt will come off because of the equity infusion between Tega and Apollo from our SPV into the target. But at the same time, we have a plan of how over 5 years we can deleverage the business down to closer to 2.5x in the next 5 years. And that will be through extraction of synergy, both at the cost level and revenue.
Synergy levels that's expected over the next 5 years from this acquisition?
Yeah, so I think over the next 3 years, we're looking at a return on equity of closer to about 18%. And we would be working towards a timeline of extracting that synergy from day one. There are cost synergies that we've identified, there are revenue synergies, there are new markets. So it's going to be a multiple of different things that's going to deliver that revenue and margin expansion across both businesses.
You're raising roughly around $361 million, which includes equity and debt. Is the promoters going to infuse equity as well, or is it entirely from investors through QIP and other preferential allotment?
No, we as a family will be also subscribing to the preferential allotment, coupled with other investors that we're in discussion with. Apollo as well will be coming onto Tega's cap level as well through the pref allotment.
How much Apollo will hold in Tega post this round?
They're very, very minority stake. It's more just a commitment to this transaction, as well as riding the upside of it, both at the target level and at Tega level.
The transaction is valued at 8.6 times EBITDA. What is the kind of EBITDA expansion that you see in MolyCorp? Because there is a huge debt, and that debt servicing is also something which is going to suppress the profitability for MolyCorp over the next 2 to 3 years.
Not really. If you look at Tega's current EBITDA, that more than sufficiently covers the interest burden or interest servicing of the senior debt at MolyCorp level. After depreciation, there's still operating cash flow or free cash flow in the business. So the debt, while it looks large, the MolyCorp EBITDA margins support it. It currently is at about 11% of revenue at an EBITDA level for MolyCorp. We're looking at expanding that to anywhere between 14 to 15% over the next 3 years.
Can you also give us clarity on the exposure that MolyCorp has to other geographies like Europe, Mexico, and Canada? Because my understanding is that there is a huge operations which is there, and you service all the mining countries as well.
Correct. MolyCorp has manufacturing plants in 14 geographies across the world. And they have a manufacturing facility in Canada, US, and Mexico as well. So they are set up to service customers locally in those geographies, as well as in South America, Indonesia, Australia, and the others.
And what about the revenue visibility here? Because over the last 3 years, we've seen some gradual decline in revenues for them. Though I think you are the preferred bidders for some of the new mining starts that's expected over the next 2 years. So, what is the kind of revenue visibility that you see in this business?
So the best part about both Tega and MolyCorp's business is that we have close to over 90% repeat business. So there's a very, very sticky nature of revenue flow through the year. So we have a very, very strong visibility in terms of how we see the revenue move from year to year because of the repeat nature of the business. MolyCorp's business is very, very contract driven. So they have short to long term contracts with customers on supply of their product. So that gives us a very clear visibility. And now the idea would be through the combination of the two businesses, how we can expand on that revenue even further.
One of the concerns the street will be having is with respect to the consolidated balance sheet because there will be huge debt which will now come in. Is there a debt reduction plan also in play here for over the next 3 to 5 years?
Absolutely. Like I said, I mean, we are looking at targeting the leverage down to 2.5x within the fifth year. We would be implementing aggressive plans of extracting synergy from the businesses, and we're very, very confident that we'll be able to delever the business fairly quickly.
Mehul, it was a pleasure talking to you today. Thank you very much for joining us on ET Now. Aisha, back to you.
Hey, that's the Tega management talking to us, talking about the nitty-gritties of that deal. Of course, that stock is going to be quite on everyone's radar. I don't know if our fundamental experts have been tracking this closely or not, but already in the pre-open rate, you can see that bit of green play out, and I think it's going to climb up even further than that.